Morning all. How are we doing? Morning Ladder, morning Dion, Peter, Adrian, Lember, Stevie, everybody. How are we doing? Friday. God, what a week. Right. Today we've got more news as well. That's all the rates we've had this week. The market's going to be a little bit weird this morning because we've got news all morning from Eurozone and from the pound. So this is all going to affect the indices this morning for scalping purposes. So we're likely to see some big movements in the DAX today after the open. Probably quite a subdued open, I would imagine, and then a decent push sort of morning, really. We've also got CAD retail sales this afternoon. We've got PMIs for the US as well. So again, volatility across 4 major currencies today after the fallout from yesterday. So yesterday, what a manic morning that was. Swissy rate as expected, pound rate as expected. Very little impact on the pound yesterday at all. Virtually no movement. Swiss went nuts. Yen, obviously, after the Bank of Japan press conference and their monetary policy statement, went nuts. Overnight, I was just looking at oil, just to see where we are with oil at the moment, because overnight we had that statement from Nigeria's oil minister. If crude prices fall below current levels, the production cartel may be forced to make additional cuts. So this is basically saying if oil prices continue to drop, we will cut supply and production, basically, and that will hopefully force prices back up, because the less oil is out there, the more people will charge for it. So it looks like they're looking to start intervening to try and stabilize oil prices to stop them falling. So let's just have a look at where oil is, potentially for a bit of a swing position. Also overnight we've had Kashida. If there is excessive volatility in the yen, we will take action. We know they're going to take action, but quite what that means, I'm not sure. There was a massive excessive volatility yesterday because of you saying you were going to take action. So I don't quite know what that statement really means, but yeah, obviously they are gearing up for some major intervention at the end. So morning, Jane. So yeah, so hopefully some big moves. I was just looking at oil this morning. I'm just trying to determine where we're going with this, because we've got this sort of bottom forming and this kind of wedge at the moment where we're really contracting down here. So this was end of last month, end of August. We obviously had that big drop in August, which is where I got out. I got squeezed in there too fast, too hard. I got squeezed, had to get out down here, and then obviously we had that pullback. Since we had that pullback, we've pushed up to the moving average. We've pulled back down, made a new higher low. We've pushed up into that trend line, which obviously everybody then went crazy and sold. And we're now struggling to form a new lower low. So there's potential here for a breakout over the next sort of couple of days. And I'm just looking to see whether or not on that news we might find some more of the oil producers thinking, right, this is it. You know, $80 a barrel, we're not interested below 80. It seems to move in psychological levels, oil. I can't see any obvious support resistance off of this low, though, really. There's nothing really that sticks out over here or last time we were through this area that is kind of like, this looks like a logical place where we have actually found a level that they're not interested to trade through. So interesting. But I like this fact that we put in a higher low here. I know I've been stung on oil, but I'm looking potentially at a swing trade on it rather than a position. So just one to have a look at, because I think they are starting to, you know, sort of step in and go, right, well, we don't want oil going much lower than we are. You know, massive with the oil countries, and I love the way he calls it a cartel as well. It's like it is like that with oil. You've got a number of countries which control the vast majority of oil supply and production. And they're all in it together. You know, if oil prices keep dropping, they make less money. It is like a drug cartel. Yeah, they got to keep pumping out the stuff, and they need it to be more expensive than it is at the moment. So there's ways and means of manipulating that. You know, we're getting back down to levels we haven't been to for a while. Yeah. So I'm just trying to pick a bottom in anything is very, very difficult. You're catching a falling knife, aren't you? But we have made a higher low. So if we can hold this level somewhere, I mean, obviously, which I don't like trend lines. They work sometimes, obviously. Worked twice there. Not often you'll find that happening, but it did. But that low, I think, for a stop under that low and taking a long-term swing, I think you'd be in with an opportunity to sort of add to that a few times on a big rally. So I'm just looking at it for one of my pension account, which I used to trade the S&P with, which is basically just sitting there at the moment doing nothing. It's earning interest in the bank, but I'm toying with the idea of pulling that out and putting a little bit of it into oil with a controlled risk down here to see if you catch this as a bottom, we do start to rally, especially with what's happening in Russia with the escalation in Ukraine. We could see a big move on oil. So I'm looking at that as an opportunity basically to maybe take a little long position. We're just about to open. I'm going to go through all the FX pairs today and see what's going on in the FX markets after yesterday. So yeah, news today, PMIs at 815 for Europe. Then we've got the German manufacturing, the French, followed by the German, followed by the pound. So PMI figures are important, so they may well move the market fairly substantially this morning. So we'll see what happens at the open. Apart from that, not much news overnight, apart from those two. So we'll see where we go today. Obviously, yesterday we had the ADR dashboard lit up like a Christmas tree with the yen. The yen went absolutely mental on that news of... oh, that's weird. 82. Look at that. The price of 82.940, the price of the New Zealand dollar yen. Oil, 82.90. I've never drawn on a chart before, flicked charts and had the same pattern. That's weird, isn't it? Anyway, we'll just remove that because it's not relevant. So yeah, obviously yen yesterday, we had the collapse of all collapses yesterday on all yen pairs. It just went absolutely crazy. 300, 400 ADR moves. Euro US dollars just hit its monthly. Normal price action obviously is, this, and literally that was done in sort of 10 minutes, wasn't it? That first initial drop. So massive movement yesterday on the yen. I'm not quite sure exactly what we're going to do from here with these yens. It's very difficult to tell. They're not releasing their... they've said that they're going to intervene. They haven't done any intervention at the moment to a large scale, as far as I'm aware. And they've said that at the end of September, the 30th of September, is when they're going to release their plan for this intervention. So the intervention, although it's difficult to tell whether it started yesterday or whether this is just the market's reaction to it and everybody repositioning themselves. But the 30th of September is when they're going to announce what they're going to be doing. So we've got a week of uncertainty on the yen. And then there's a very high probability, obviously, the yen is going to power up next month. So I think probably from here, the yen's probably going to power up anyway. So there's a couple of plays here. we're either going to continue this move today, which I suspect based on what's happened in Asia, or we are going to try and pull back into this area and then start the move from there. So a bit of a correction, basically, and a profit take on what happened yesterday. Obviously, the banks moved this. They're sitting pretty at the moment. Whether or not they want to get out or they're going to long-term play this, I don't know. Quite often when we have these fundamental shifts, as you know, these get left in place. So, it's a big potential move to the downside, I think, coming. I'm more inclined to want to just short the hell out of this. But like I said, if you're going to put a position on this and you're going to start one here and start to position trade this and build an entry, bear in mind when you're coming up into here, you're moving 300 pips. You're moving an ADR and a half just to get back up into this area. So it's a really tricky entry. You either need to jump in there and you're going to ride it and you're going to get it, or you're going to jump in there and you're going to have to scale. And some of them are worse than others. US dollar yen, you're looking at sort of an ADR. Actually, from yesterday, this is where we were looking at. It's 2 ADR to get back up there, but we're halfway there, aren't we? So, really tricky one today. DAX has opened massively bear, big bear candle there. I had a buy stop set in there for the gap fill. Wow, that's a big move. Fast. Things were frozen. Okay. Rocky. I can't read all of that. Check it out from backtest the worst days. Even yesterday, the worst. Backtested the hack. You can't hack the market. You keep using these words, hack and glitch. It's like a game. I honestly don't know what you're talking about. DM me your strategy and I'll have a look at it, and then we can look at it in the live room. But I can't decipher what you're saying in that chat. The live room isn't for sitting here and formulating people's strategies, I'm afraid. I can't really work out what you're saying there. DM me your strategy in Telegram. Come into Telegram, tell me all about it, but I can't really cover it in the live room. It's not what it's for. I'm very excited you found a strategy that's working for you. That's good. Yeah, so big drop down this morning on that. I'm not going to do anything with this until we get some movement. So, in fact, I'm probably not going to scalp it this morning, to be honest. I'm going to wait for all that volatility to be over. I don't want to be scalping in news. It's far too dangerous. Big old opening range. Look at that. Wow. I was looking for a fairly small, short opening range this morning, but we got a big one. So I suspect what we'll do is we'll sit here for the next 10 or 15 minutes. And obviously, first news is 8:15, so we'll see what happens to that. So yeah, going back to these yens, very tricky to know what to do with them. Obviously, we've fallen out of bed completely on the yens. Whether or not this is going to go from here or whether we're going to pull back, very, very difficult to tell. So going to give the market a day or so to settle down. And next week, just have a look at where we go. And then on the 30th, obviously, they're going to announce their intervention. So yeah, interesting. Pound yesterday, obviously we didn't get much movement on the pound yesterday. So the news came out and we got a bit of a whipsaw, basically. A little bit of a drop yesterday, but nothing dramatic. So, pound yesterday opened up here, closed there on pound CAD. So no little bit of a push up, spike on the news and retracement. But overall, from the news yesterday, the pound seems to be, apart from against the Swiss, obviously, the pound seems to be fairly weak. So it doesn't seem like the market was particularly interested in that interest rate rise, which, as I expected, we're going up 0.75, inflation's going up a lot faster. these normal interest rate rises are just sort of keeping on top of, and the plan to start slowing things down with inflation. It's not really helping massively. So we will see what happens with the pound. Swiss franc was the big one yesterday. Obviously, that interest rate, and this is crazy, isn't it? Yeah, we get an as expected result on the Swiss franc. It does 300 ADR. We get an as expected result on the pound, and it goes like that. Complete polar opposites, but both of them did exactly what they said on the tin. Yeah, and you get that kind of reaction in the market. So things gone absolutely crazy yesterday. Same sort of scenario as the yen. Today is the decision-making day. You've got a very good chance of getting a high-risk reward trade in today. Breakout long, we are probably going to just run for it. Breakout short, we're going to come down and fill some of this gap. So looking at all of these Swissies, it's an opportunity on all the Swiss francs today to either get that gap fill done or get that continuation push. So you can look at all of these Swissies, and Euro Swiss has already started. This is ahead of the news. Market's over very weak this morning. So yeah, pound Swiss dropping, New Zealand Swiss holding there, and obviously US dollar Swiss holding as well. So very high probability of one of those two things happening. So US dollar Swiss, you've just had the Asian breakout. So you could get the Asian breakout and drop. You could just go from here. So there's chances either way to get a fairly simple trade, because the thing that makes it simple with these trades is you're either going to get the gap fill done, or you're going to challenge high of yesterday and potentially break out. So we're either going to get that move and continuation, or we're going to get that retracement. If it goes sideways, not really going to lose anything, are you? But they're really simple trades from a entry and stop sort of perspective, aren't they? Yeah, and you know where they're going. It's either going there or it's going to come down and we'll get the gap filled. So all these Swissies today, there's really good opportunities for stop loss style trades. These are the type of simple setups. You risk 1%, make 2%. Easy sort of trades you can take. But yeah, it'd be interesting to see what happens with those today. Morning, Sammy. Right, so ADRs, nothing today. I'm just watching the time. We've got 6 minutes until the news, and then we'll see what's going on with the DAX. Nice big drop down today on the DAX. Just going to quickly look at what the other, I presume the other indices are following suit. Yeah, so just taking out the low. Dow is weaker than the S&P, which is weaker than the NASDAQ. So weak this morning. We've got the gap fill, obviously, in play here as well. So potentially a nice big long opportunity all the way up there. So with the indices yesterday, let's cover those first. Let's look at the dailies. This is the level that I'm waiting for a test on. So getting all the way down to this double bottom down here, which we retested again there over a couple of days. This is where I think we're headed. 12,426-ish, that level. Obviously, let's have a quick. Yeah, it's pretty much spot on. So that's the level which I think we're heading for. Now, whether we're going to hit it today, I remember I said yesterday, we'll either have a crack at it yesterday or today. So at the moment, it looks like the market's reaching for that level. We'll see what happens on the news. There's a good chance we might get that happen on the news. So we'll just get that push down on the news to test this level. There's going to be a lot of orders triggered at that level. It's going to be dependent on how much gets triggered long. at the moment with what's going on with the market at the minute. You know, we know we're in a massive downtrend here. This is the level after the initial collapse that we tested and we bounced from. And then we came back and retested that level and bounced from it. But obviously we put in a new lower high before we come back down again, another new lower high. And this is the lower low. So there's one of two things that can happen here. We're either going to continue to contract from here and have another pullback, or this is I kind of class that as, it is two hits, but you know, it's whether you say once, second, third hit. The fourth hit on a support or resistance, normally you'll smash through it. So, you know, you knock on the door 3 times, if you don't get an answer, you break the door down. That's the type of thing that tends to happen with support and resistance. Or it will hold and you will go, there's no way we're getting through here. The market will gain confidence and it will go completely the opposite direction. So it's very difficult to tell what's going to happen. Either way, I think we're going to get a bounce from this because there's going to be a lot of limit orders set down here to trigger. But whether or not that just does that and then we get that slam through, we won't know. So if we get down to that level off the news, there's a high probability setup for going long. So, you know, everybody's setting limit orders down here. So if you want to, stick a limit order. Your limit order is going to get triggered. Whether or not it's going to do that, don't know. We'll see. But this is a massive key level for the DAX that we're approaching. And obviously, being in a downtrend, I got a feeling we might smash this. If we smash this, we're going really long today. Really short, rather. I mean, we're going to, what I mean by really long is a big candle. We're going to get a big move to the downside happening. So very important level coming up on the DAX, need to be aware of. NASDAQ, we had another down day yesterday. Same with the S&P. The Dow managed to just about recover yesterday, but it's coming down hard today. So with these, obviously, on the daily, it's the same. You know, we're in a downtrend. We're in a bear market. We're looking for shorts. There's a lot further to go on all these US indices before we hit a level of support. So bear in mind, all the indices tend to move together. If the DAX gets that level and collapses through that level, it's going to drag the indices down. So the US indices will get dragged down with it as well. So we could see a nice down day forming. It looks like it's forming already, but you know, this is if this is going to be a down day, this will be our 4th down day on the trot. Yeah, from that collapse. So big sellers market at the moment. And the Dow, again, you know, Dow's closest of the bunch. The Dow, I was looking yesterday. I was trading this yesterday. I got done yesterday. I ended up yesterday on the day being $2,000 down on the evaluation account. I took it up. I was really annoyed. Target on it was 77. I took it up to 75.5. And I thought, shall I push it or shall I just leave it? And I pushed it. And basically, I was trading the Dow and I was watching this 30,000 level here. Yeah, so I was watching this level on M5 yesterday. And I kept here. I was sure we were going to break it. So all in this section throughout the whole of New York, and New York did nothing yesterday. It was an awful session. It was a chop fest, and this is why I got chopped up yesterday. I was continually trying to sell into these rallies short. And basically, I wanted to pass the evaluation. So what I was doing was getting sort of a percent into profit, break even, stop out. I was like, right, I'll go short again. Getting there, and then I would stop out on one and lose 1%. Then it would look like it was rallying again to the downside. I would stop out at break even. I would have another crack at it. I was selling every single one of these. And in doing that, I broke even on most of the trades, but I managed to lose 2 or 3 of them. So I lost 3%. Just trying to crack this level, because every time it was getting there, it was like, you know, we knew we had that bounce, but we'd had this massive collapse. I knew the markets were going to come down. It was just couldn't quite yesterday, New York, get close to it. And then it pushed up at the end of the day. I took another short here towards the end of the session on that bearish engulfing, got a second position on it. And as soon as I got the second position on it, came back up and I took a 1% loss on a break even. And then I gave up and then it collapsed at the end of the day. But we still didn't get through that level. So what has it done this morning? Smashed it. So Dow yesterday just drove me through the wall, up the wall. I just couldn't trade it yesterday and ended up taking a big backward step, unfortunately. But so yeah, that's the level that I've been waiting to crack. We've just done it now. So it remains to be seen whether or not we're going to get that move down. We just had the news while I've been waffling on. Not done anything. So market not impressed with the French figures. The German ones are the big ones at 8:30. That's the much bigger economy. So positive, negative, balanced. That's why it's not done anything. So nothing good or bad. So we're waiting to see what happens with the German. But yeah, Dow, drove me up the wall yesterday. I see that you use all of the Pro Pen features. No? What do you mean? Oh, do you mean the Epic Pen? What do you mean? Yeah, there's lots of, yeah, I see what you mean. Yeah, I upgraded to the Pro version of Epic Pen, if that's what you're talking about. Because I could start drawing squares and writing and stuff. I just couldn't be bothered. It takes longer. For me to draw a box like that, it takes longer for me to navigate the menu over here, to switch over to the box and get the box at the right level, and then come over and draw the box. And it does for me to just manually hand draw a box. I gave up with that. I only did a trial of it. Yeah, no, I know. I gave up. Anyway. Opening range low being tested on the DAX at the moment. I'm not going to get involved in that this morning. I've got a feeling today we're just going to get a collapse on the indices. I don't want to chase it. I just want to wait for a bit of a pullback. If we can get a pullback into here, I might look for a short opportunity. But I'm just being a bit overcautious today because I haven't got much free margin left on the funded account. I'm not on the funded account, on the evaluation account. I've got to be a bit careful with the trades that I take today. So, right. So I'm probably going to wait. Couple of short. I'm going to wait until New York. So that's all the indices covered. So big old downside potential on all of those. We're really close, and these act like magnets. Support resistance acts like magnets. The closer you get to them, the faster it gets drawn to them, because people are looking to test the areas. Because the TPs are down there, people are selling into them, and then when we get to them, obviously we get a lot of limits triggered and a lot of profit takes triggered at support resistance. Same as everybody does. You target support resistance areas. You target where you think price is going to turn around because you want to get out there. So what happens? It turns around there. That's why support resistance works. So we've got magnets there. It's going to be a big old day on the Dow to get there as well. We're going to need just shy of 500. So almost an ADR push, as you can see, almost an ADR push to get there. The S&P's 150 ADR. Nasdaq's 150 ADR, and obviously the DAX is virtually on it. So really interesting day on those today. We could get a huge bounce put in today as well. So, difficult to tell. Use price action, see what the market's doing. Market at the moment is selling short, obviously. Right. So FX pairs. The RSIs, there's a lot of extensions on the RSIs, but I'm going to whiz through all the pairs today. We're going to have a look at everything. But if there's anything anybody wants to look at in detail, do let me know. But I want to just have a skip through everything so that we can see where everything's positioned. But until all of this news is over today, we've had all the rates. We need to really see what the market has made of these and see what these moves do, whether these continuation plays start to happen like the Swissy, everything's going to keep piling long against the Swissy, see where everything's going to keep piling short against the yen. We need to just see what's happening with these and let the market decide where we're going to go. And then once we know that, we can look for pullbacks to enter into these positions. So we'll just wait and see. Next week, it's a little bit of a lighter week next week. That is the day that they're announcing next Friday. Japan are announcing their monetary policy decisions and what they're exactly going to do with this intervention. Excuse me. Although I'm sure before then we'll get some leaks coming out, but you never know. But as you can see, next week, fairly weak news week, light news week. So the market has just got an opportunity to trade normally. So a very quiet week after the absolute chaos that we got this week. Right. Yesterday I heard rumours about some big thing going to happen in the world, 23rd and 24th. Recommended to stock up food and take out money from the bank. Okay. That's today and tomorrow. So what, is the world ending? Rocky, I'm starting to question your sanity. Who did you hear this rumor from? Armageddon. Is Putin going to press the button this afternoon? We'll see. Right, let's have a look at the FX pairs. Back to the real world. Aussie dollar CAD. Shorts. So this is one of the few pairs that hasn't been affected by the news this week massively, because obviously we haven't had any rates from these guys. Business as usual on this. It is in a downtrend overall, but at the moment, as you can see, since July, we've been very, very, very sideways. It's very range bound with a slight bearish bias. So any upside hits, so looking at hourlies, you know, we haven't had one. There's no opportunities to get into it. You know, this is the problem at the moment. Like I say, this is why I'm taking a little bit of a back step, because there's a lot of stuff just can't get into. Need to reevaluate and look at the markets as to the best ways to get in at the moment. That was the only entry you had as an hourly opportunity with a possible add and exit. You know, there's so little, it's such slim pickings over at the moment with all these things going sideways. But yeah, so ever such a slight downward bias. We're rolling over at the moment. So it looks like good short opportunity right now where we are. We're just retesting the 4-hour candle there. So on the hourly, you've just had the reversal alert there, but you will have had reversal alerts on the hourly. Probably wouldn't have got one there. You would have got one there. So you had one there. And then yeah, so that would have been the second. So and we've just taken out liquidity, so it's a lovely area to look at for short. You know, to play it safe, just down to there, really all you can do with Aussie CAD. But yeah, sideways on that. The Aussie's just neutrally weak at the moment. It's being pushed around by the other currencies. Obviously Swiss franc we can just ignore at the moment. We don't know what's going to happen with this. We're either going to get that and that, or this is the pullback on the drop. Very, very difficult to know. A distant online friend of mine posted this, but didn't find anything related to it on Google. Right, okay, yeah. So someone on Facebook posted a picture of, for example, Vladimir Putin sitting next to a red button which was photoshopped in, and now everybody thinks World War III is going to happen tomorrow. You're going to need a lot more of a logical mind if you want to be a trader. Please don't tell me you are one of these people that believes in the Chinese moon phase strategy. Have you heard of that? there's a strategy that enters the market long or short, depending on moon phases. Come on. I'm not a superstitious man, as you can probably tell, or religious. So there you go. Right. So yeah, shorts on Aussie Swiss. Just made a new low before the Swiss franc popped. This is the Swiss franc rate, the last rate announcement on the Swiss franc. Let's just zoom in so we can see what the hell I'm doing. That was the last rate announcement on the Swissy, where they took us all by surprise and it massively powered up. Then we went into a bit of an accumulation on it, and then we started to move towards the next rate announcement. Next rate announcement comes in, I would say positive, because they increased interest rates, although they've said their inflation figures are going to be a little bit worse than normal, and the market goes tonto and creates a complete reversal. To me, the interest rate rise and the fact that inflation is getting a little bit ahead of them more, I suspect we should still see a positive Swiss franc. Peter, you heard it too? So what's going to happen? What is this thing that's going to happen? A big thing that's going to happen in the world on the 23rd or 24th? Somebody enlighten me. I haven't heard about this. It's obviously not that big because it's not being reported on the news. If it's reported on social media, it's a load of push. Ignore it. If it was that important and it was that big, it would be on the telly, surely. Are you talking about the finance markets, or are you talking about something else? You've got to enlighten me. You can't just say that something, you've heard rumours that something big is going to happen. I need details, facts, please. I need to make a decision based on facts. I can't make a decision based on something might be coming. We're going to have a flood at some point over the winter. I can't tell you when, but it will be here. Just a rumour on Twitter of what? Peter, what is it? Help me out here. I'm trying not to be sceptical, but as you know, I'm a man of science. I'm a programmer. If it's not logical and I haven't got facts in front of me, it doesn't exist. The Vatican supposedly have vaulted all their gold, etc. Do you know what? I was watching, this is a brilliant film, just changing the subject for a minute. I was watching World War Z the other day with Brad Pitt. And it's the Vatican, isn't it, that put up those walls when the zombie apocalypse started. They knew, the Vatican, they knew before the zombie apocalypse was coming that it was coming somehow. I don't know how. I'm 99% sure the Vatican is run by aliens. But anyway, that's my theory. But yeah, in World War Z, they knew. Weird. So if they started vaulting all their gold, maybe we should be buying gold. I haven't looked at gold yet. Do you really want to be buying gold at the moment? Who knows? German news has just come out. So let's flick over to the... very little market impact to any of this news this morning. German figures, I suspect they're going to come out the same as the French, one positive, one negative. One as expected, one negative. Yes, ever so slightly on the negative side, which would be negative euro bullish indices. But not a lot. So very little movement at all this morning. Next news, 9:30 for the pound. World War Z, they knew first. So, you know, if the Vatican have... But why would they put all their gold in a vault? Sounds like a conspiracy theory. I thought it was Israel. Yeah, I mean, you know, if something's going to happen, you know, you can't just say, like, something is going to happen. surely somebody said what that something is. Otherwise, how do you prepare for that something? Is this one of those things that was written by Aristotle in whenever, and he forecasted that on this date something else would happen? You know, every year you get the posts on Facebook when Judgment Day happened in Terminator. Every year, this is the day the machines are going to take over. One day the machines will take over, and if it happens on Judgment Day, won't that be weird? Forecast by James Cameron. Anyway, what's James Cameron? Was he Terminator, wasn't it? I can't remember. Spielberg? One or the other. Anyway, yeah, not going to buy gold, obviously. Selling gold. Or not selling anything. I never trade gold. So Aussie dollar Swiss, yeah, big confusion. Need to see what the market's going to do. It's going to be quite tricky to trade this for the next couple of days to a week, really, because you're either going to get this push down, in which case, are we continuing in the trend, or are we just pulling back with a new peak formation low, ready to make a new high market structure shift? Don't know. If, however, this makes a new high here, I would say the market's lost interest in the Swiss franc. But, you know, up here, I'd be looking to sell. So tricky. The Swiss is very, very tricky to play at the moment. We did get stuck at exactly the same spot twice. So obviously from a downtrend perspective, support, turn resistance, held. So it would really say to me we should be shorting stuff against the Swiss, which kind of backs up what I thought. Yeah, the Swiss franc should still be strong off the back of those interest rate figures. So, but it's just tricky at the moment. We just need to wait and see what the market does. Hopefully today, but you know, that'll give us a clear run into next week to actually have a bias. But I'd like it short still at the moment. Yens, I really don't know. Really don't know. The thing with the yen is, I don't know if anybody's heard yen strong this morning. So yeah, I mean, strong yen. You want to be short Aussie yen today. This yen, this move here was based on the Japanese bank basically saying we are intervening. They haven't. I'm unclear as to whether they actually transacted yesterday or whether this is the market basically going brilliant. Let's buy a load of yen, buying the bottom basically. It's unfortunate you can't. There's no yens. There's no yen first pair we can look at to show yen strength. But obviously, as everything is coming down against the yen, you know it's yen strength. But you know, it's like us buying the bottom, thinking, right, like with oil at the minute, oil's cheap. If all of a sudden OPEC turn around and go, we are stopping manufacture of oil right now because we've got way too much of it, the oil price is going to go up because everybody's suddenly going to go, right, we've got the bottom, we're going to buy the bottom. That's what's happening potentially with yen at the moment. The announcement has come that they are going to intervene, which will strengthen the yen moving forward and potentially weaken the dollar. So what's happened is yesterday, everyone's gone, right, we need to buy yen. And everything has started to come down against the yen because the yen started to get bought up. I don't think that was the Bank of Japan intervening. That was the announcement of intervention. So there is an opportunity for a pullback before the drop. But look at it today. It seems to be that is just a continuation play happening at the moment. So I think basically over the next month, we're going to see strength coming through in the yen by the sounds of things. So it's trying to find an opportunity, I think, to get into short on these. Whether or not we're going to get that or not, you know, this sort of cascade which happens and continues, I don't know. But with this sort of fundamental news, you can kind of just hit the sell button, and you've got a very high probability of it working out. It doesn't look like they're coming back for the gap, does it? Certainly not this morning. So shorts everything, I think, against the yen at the moment now. Based on the flip yesterday, which is what we've been waiting for. And it was so weird, wasn't it? Yesterday morning, I started off by saying, at any moment, the Bank of Japan could intervene. An hour later, boom. But I've been saying that for weeks and months. We've been waiting for this moment, and that's why I haven't been trading the yen. I've been waiting for that intervention. But we just strung out for such a long time. Just kept me out of the yen, but unfortunately, I couldn't take advantage of any of these. But yeah, so big shift to the downside. Yens. Let's look at all the yens, get them out of the way. CAD yen, same thing. So with the strengthening of the yen has always, throughout my trading life, been a traditional safe haven. Since COVID, that changed. There is a chance now that we might see the yen becoming a safe haven again with this intervention, but this intervention isn't going to strengthen their economy. It's going to hurt because they're having to buy a load of their own currency, which is massively devalued at the moment. And if that devaluation does continue, it's going to really hurt them more. So we might see this take over now as the main strong currency from the US dollar, because the US dollar, as we know, off of FOMC, was very bearish. They were coming out with a lot of statements which were, yeah, it's going to get bad, guys. We don't know how bad. It's not a case of, is it going to get bad? Are we going to go into a recession? It's a case of, we are definitely going into a slowdown, probably faster than we thought we were. Slowdowns are the precursor to recessions. Very rare you get a market slowdown without a recession following it of this magnitude when inflation rates are going up this fast. So it seems to me that we may find a weakening US dollar and a strengthening yen moving forward. But we will wait, we wait and see. But everything you're trading against the yen, you want to try and look for the strongest and the weakest. So at the moment, the pound, the euro, yen are probably the best. Swiss franc yen, obviously yesterday we saw the Swiss franc yen was the monster. We had, what did we end up at yesterday? 8,800 pips on a 200 ADR pair. 400%. 400% ADR move. Just, it's undone. What's that? 6th of September. Yeah, it's undone the entire month of September. Undone in what? 1.5 hours, pretty much. Absolutely crazy. Black swan type monumental scale. So this is a tricky one, but as I say, the Swiss franc, I don't think the Swiss franc is going to be that weak. This is that knee-jerk reaction yesterday on the Swissy. I don't think that was warranted. So, but right now, obviously, yesterday this was the weakest currency against the strongest currency. This morning, the Swiss franc in brown, horrible colour for the Swissy. We are sitting midline, so not strong, not weak. Slightly stronger than level. So we are a little bit stronger on the Swissy this morning. So we'll see what happens. Euro Swiss, obviously Euro Swiss is a huge downtrend on this thing. We've been in a downtrend on this since 2018, since just after COVID. Swiss franc, always the big brother of the euro because there's more money goes through it, just because of the Swiss banking system. So continuation shorts on this, I think, because this, as shown here, was a complete overreaction, and the market is realizing the Swiss franc isn't actually that weak. And obviously the euro is weak. So, but I mean, I would never have taken that yesterday. Did anybody get into any ADR reversals yesterday, just out of interest? And actually make them work? Because if you actually look at them, all these moves on the Swissy yesterday, they've all played out beautifully. Yeah, so I mean, you would never have got in short, right, until you saw some bearish price action, yeah? So that would be my entry, my first entry on that ADR yesterday. There. On M5, you'd have had a reversal of that in there. And then from that point, we're looking somewhere around 57, so half an ADR. So you wouldn't even got into two positions because you wouldn't have got reversal alert until somewhere in there on the 5-minute chart. So yeah, played out beautifully, didn't it? Just interested to see if anybody took them, because I never take ADR reversals on fundamental events, fundamental shifts like that, because quite often, as we've seen with the US dollar recently, you just get accumulation and a push because something's changed. But that, to me, the Swiss franc one yesterday was not a change. That was an overreaction to what was positive news, basically. They're putting the interest rates up to keep on top of inflation, falling in line with the rest of the world. So, interesting one, that one. But yeah, still shorts, Euro Swiss. Did we cover all the rest of the Aussies? We didn't. I've jumped, didn't I? So yeah, we're looking at the yens. Euro yen, weak currency against a strong currency, coming down hard. Pound yen, same thing. Pound's made even new lower lows today. New Zealand yen, US yen. So you see the US is holding up better. We haven't got anywhere near new lows on that one. That's holding, but again, strength in the currency at the moment. So yeah, that's all the yens. Aussie New Zealand longs, still looking for longs on it. Again, like I said, a lot of people were looking at this for reversals, for mean reversion. Remember I said, just be very careful with it. This is a huge uptrend. Yes, it's massively extended, big push, but there's a chance of accumulation push. We have made a new high, and we seem to have rejected the highs at the moment. So this could come down from here. But I would look for that. So that's where I would be looking for long opportunities if we get down there. But I'm not really interested in mean reverting it. But yeah, it's certainly got a shot. But it's also got a shot of just going into an accumulation, waiting for the 24 to pick it up and go. So Aussie US shorts, still strong US, stronger than the Aussie. Again, try and get in. This is what I'm going to be spending next week concentrating on, is looking at H1 on all these pairs, all these big trenders that we've got at the minute, where we've got these strong moves to the downside, and I've not been able to get in on H4 with any real decent opportunities. This one's given a couple over the last sort of month and a half, 6 weeks or so. There has been a couple of opportunities on this, but a lot of them that hasn't. So I'm looking at the hourly, and I'm looking to do a sort of longer term analysis on the hourly and see how many opportunities we got on the hourly for shorts. You see, since where were we? Let me just go back to where we were on the 4 hour. Uh, 8th of August. So on the 8th of August, we had two opportunities since the 8th of August. On the hourly, we got 3. So there's only the extra one. This is part of what I want to do. I want to have a look at how many more opportunities you get on the hourly to get in, as opposed to the 4 hourly, because you do get more. But I was interested to see whether they're in the similar spot, and they are. So you wouldn't have got in much different on the 4 hour on the hourly chart there. I mean, they would have been very, very similar entries because they got extended at a similar time due to the strength of the push. You would have got that one, though, which you wouldn't have got on the 4 hour. So you'd have had that extra winning trade. So you'd have had 2 winning trades on the 4 hour and only 1 on, and 3 on the hourly. So that's kind of what I want to do analysis on, because I've got a feeling we are going to continue while we're in recession, or while we're heading to recession worldwide. I get the feeling we're going to get these trenders continuing, because you're always going to have things like the yen and the US dollar in which are infinitely more powerful than the other currencies. There's a chance of the euro and a chance of the pound powering up, but I think the Aussie and the New Zealand, the Swissy will just grind along as it always does. But I think there's a good chance that a lot of these are going to go into trends, and we need to find a way to get into them. Hourly entries are more dangerous because you're getting in possibly there instead of there, for example. So you will have, obviously you've got to get a reverse alert, so you wouldn't have got in until there on any time frame really. But yeah, so that's kind of what I'm sort of going to be looking at, and I might start trading M5H1 on these trending pairs, just to try and get some entries. But 24 pullbacks and 72 pullbacks are really where it's at, I think, with the trending pairs. So just want to be alerted when we get back to these areas on the hourlies to get in. And quite often we don't get there. This is part of the problem. So here, for example, you've got more chance of getting extensions on the hourlies. In this particular case, we didn't on the Aussie US, but on a lot of these, when we're just getting close to the 24 and we don't get into that zone where we're looking for those pullbacks to start, those next legs down, you're going to get extensions on the hourlies in these places. And then, if you get in there, you might have to take a couple more if we do push up into the 24.72 zone before you get that move continuation. So you just got to be, with the hourly, I think you've just got to be more vigilant and make sure you're spacing properly. On the 4 hour, it's a little bit less important because on 4 hour extensions, they tend to happen a lot quicker. But on the hourlies, just because you're extending on the hourly, you might only be here on the 4 hour when the hourly's up here. So you've got all that extra movement potentially, which you can go into drawdown on. But I'm going to do some analysis on those. Catch you later, Rocky. DM me your strategy. CAD Swiss. Don't know at the moment. I would like to say that oil, if oil powers up, CAD's going to get stronger. Swiss franc is fairly strong. Probably that sort of movement, potentially. So we might find that we're going to go into one of those for 3 or 4 weeks while we're waiting for next leg to start. But oil is going to play a big part in it. And obviously what happens with the Swiss franc after yesterday's rate announcement will. So either the Swiss is going to continue to power up, in which case we're going to get that sort of pressure on CAD Swiss, or it's not. And if oil powers up, we're going to get that sort of pressure. So again, I want to wait and see what the banks do with this and give us some kind of clue. Euros, the rate announcement on the, euros, where's we gone? Here, I'm going to find my news. The rate announcement on the euro, where were we? Was it the week before? Week before, wasn't it? CAD, euro. So the rate announcement on the euro was 0.75. That was on the 8th of September. I was just trying to find the date. Which was there. So since the rate announcement, that positive rate announcement, where we thought we were building up for a strong move on the euro, we've literally got accumulation. So since the rate announcement 2 weeks ago, we haven't gone anywhere. We're in an area of balance. Yeah. So you're looking at all of these, from that date. Canadian dollar's been weak off the back of oil, so we've got a little bit of a push up, but look at where we're going now. We've just got a reversal out on the 4 hour. Euro Swiss, we know obviously Swiss is stronger. Euro pound, again, pound is massively weak. We've had lots of weakness, so the euro's managed to take a little bit of advantage of it. But look at the strength of the move is kind of what I'm trying to demonstrate here. We're not seeing massive strength, massive positivity off the back of this. Yeah, the euro is not massively strong. Where we are here, obviously against the yen, we've dropped. Euro New Zealand, we've managed to push because we've had a weak New Zealand dollar. US dollar, obviously stronger than the euro. So my point is, the euro for the last few years has been the whipping boy of the market. Whatever the other currency does, the euro is pushed and pulled around. I don't think anything's changed. You can see that we've had a strong US dollar. The euro has come down. We've had a weak New Zealand. It's gone up. We've had a strong yen just happened. It's come down. The Swiss franc was strong. It's come down. The Canadian dollar's been weak. We've pushed up. The pound has been weak. We've pushed up. So for me, the euro is basically still, I think, flatlined. So when you're trading this, you need to be looking at it. And if you get an extension on RSI, the first thing that's got to go through your brain is, what's the other currency's strength or weakness? Are we looking at a strong pound or a weak pound at the moment? So if we're extended there and we've got a weak pound, it's probably not going to do a massive drop. It's not a move before a continuation. So we need to basically evaluate what's happening with these other currencies with the euro at the minute. Euro odd, obviously the Australian dollar is kind of neutral weak. That's why we've got a complete range on that one. The Canadian dollar has been fairly weak, but a little bit of a push up. Canadian dollar potentially strengthening on oil. We should see a drop. So I'd like to look at shorts on that one. That was where you got your entry and you're in profit on that if you took that one short. Euro New Zealand, this is the one that I got into and got squeezed on, and I got out, and I'm kind of glad I got out, although now it is starting to come down. Where did I get out? Was it yesterday? Yeah, no, I got out here. So we got this pushed down. My break even was sort of just down here somewhere, just below these lows. So I didn't quite get to breaking even on it. I'd be kind of in the situation I was in on Wednesday on it at the moment. So it is starting to roll over, but not massively. Morning, Alan. Not massively strong or weak at the moment. New Zealand, it's kind of middle. It's lost its weakness, so we're getting a little bit of a push down. But you know, with this one, there's been many extensions which haven't held because the market was rallying into the rate announcement, expecting big things, and then we got as expected, which wasn't big things, which you would say would normally weaken the euro or keep it neutral, which it seems to have done. But the New Zealand dollar just lost all will to live, and the euro's managed to push against it. So, oh, Alan, that's a bit of a coincidence. You turn up, and so does our adult dating site friend. Anything you want to tell me? Oh, child abuse, isn't it? Naughty. I haven't seen them for a while. I haven't been around for a while, have they, the adult dating bots? So yeah, Euro New Zealand, I still like it as a short, but you've got to rely on some New Zealand dollar strength. And as you'll see from the news, there is none. There's no reason. We've got the unemployment claims and a talking head, but there's nothing coming up that until beginning of October, when they're going to announce new rates, that is potentially going to strengthen that New Zealand. But what we are saying, we are seeing, which is what I've noticed, now we're getting all of these fair cop gov, yeah, caught you. What I will say is now we have seen these rates now. We've had these rates trickling in now for the last sort of 3 or 4 months, these rate increases starting. I'm noticing a trend in a couple of weeks, 2 to 3 weeks before the rate announcement. We see currencies strengthening into them because they are, I think what the market is doing is it's expecting a rate increase. So we would expect a forecast to come in at something like 3.5 to 3.75. Yeah, on the New Zealand. So the market is factoring in strength in the currency based on that. And it will be a case of, let's see what happens there, and then let's see what the inflation figures like. If inflation figures come out worse, and they still do this, it's going to give the currency a big boost, isn't it? So we're seeing this trend, and we saw it with the euro very, very clearly. This is the rate announcement. And then, in the month preceding, we saw massive strength in the euro for no reason. Yeah, the euro's stuffed. We know the euro's stuffed. But it's strengthened. We've seen it with the US dollar. We've seen it with a fair few. Look at the, what do we have? Not so much the Swissy. What did we have yesterday? Brain's gone. Oh, yeah, the pound, wasn't it? Be interesting to see actually the pound. Yes, and what happened with the pound in this particular case is obviously the pound has been dropping like a rock, and then a few weeks before we stopped dropping like a rock and rally into that was the previous interest rate, isn't it? But yeah, look, so there you go. No, I'm right. So a couple of weeks before the interest rate, which was yesterday, we stopped dropping and we start to gradually rally into the interest rates. So, you know, what seems to be happening is a month or so, or just under, before a rate announcement is due, we see either some strength starting to happen or any weakness starting to tail off. So the market basically getting ready for a rate announcement. So New Zealand's coming up in a couple of weeks' time. So this is why we might be seeing now starting this Euro New Zealand starting to roll over. So this might be the market starting to strengthen up the New Zealand or stop it devaluing further ahead of those interest rates. So it'd be interesting to see what that happens there, as to whether that theory kind of sticks. But for the moment, I'm still short everything euro, but we need strength on the other side. So things like Euro New Zealand, in hindsight, after getting stuck in that squeeze, were probably not a good idea, because we should be looking for something like Euro Yen, Euro Swiss, Euro US dollar, Euro New Zealand, Euro Odd, and Euro Pound. It's questionable whether there's any strength in those other three, which will be pushing the euro down. So Euro New Zealand neutral to short. We've come up to a beautiful double top area up here. So this area we've rejected very, very nicely. It's whether or not we're going to come back down and, you know, honor this range. So is this top of range? We'll find out. But swing traders are in for the long term there. Euro US dollar short, can't get in. Morning, Andy. With these rate hikes, the market buys the rumor and sells the fact. Yeah, that's the kind of the saying, isn't it? Although with the yen, with the rate hikes, yeah. So the run up, buy the rumor and sell the fact, unless the fact is more beneficial at time of fact being released. And that's the thing we never know, isn't it? So yeah, it's the run up, assuming that the rates are going to increase, and then when they increase, sell the hell out of it if inflation is worse than expected. I think that's exactly what's happening with the vast majority, and that's what we saw with the Swiss franc yesterday. Excellent. They've done what they said they were going to do. However, they forecast that the inflation is going to be worse than expected over the next 3 years. Oops, negative, and off it goes to the opposite direction. So yeah, that's exactly what happened yesterday. But the trouble is, you can't get those inflation figures until the rates are released, which is what tends to come out in the press conferences, which is exactly what we saw yesterday with the Swissy. So you can never tell. If you knew, there's only a very few people in the world that know, and I'm sure they're very rich now, and they work for banks and for central government. So Euro US dollar short, yeah, continuing short. Not going to do anything on that until we get an opportunity to get in short. So not me reverting that one. Pound odd. Again, the pound odd is a very tricky one. The pound at the moment is very, very weak. Obviously, you can see that the Australian dollar is just sideways neutral against a weak. So it's a weak currency against a weak currency at the moment, which gives you a range. Buying the lows, selling the highs, no extensions. Just about got one there. Nice little short. But you'd have to be very quick, and you'd probably find that would have caught you in the Asian session and you'd have missed it. So, which is what the EA is there for. If you had the EA would have triggered you in on that automatically during Asia. But pound CAD still shorts, so I would expect the Canadian dollar to power up more. The Canadian dollar gets dragged along with the US dollar. US dollar is pretty strong at the moment, so we would expect Canadian dollar strength, and there is the additional Canadian dollar strength in oil, which potentially is going to rise. So yeah, continuation. Shorts. didn't get extended there. Hourly didn't quite get it either. Close. And this brings up a good point that somebody brought up the other day. If I was using close instead of median, just about got it. Yeah. And this is the difference between a setting and an indicator as you taking a trade or not, which is why I always say trade your charts, not mine, because you may get something completely different to me. And you take that opportunity. Well done. If you did. Mind you, I don't think you'd have got a reversal alert on that until here. So, not actually amazing, was it? But anyway, shorts, looking for shorts on it, any kind of pullbacks on the pound, still looking to short it, same as the Swiss. So there was a nice entry on this one yesterday for a mean reversion. Again, on the ADR, on M5 yesterday. We've had other alerts come in since, but your reversal alert on this one yesterday would have been there. That would have been your candle, M5 yesterday. So, yeah, very hard to get into these ADRs yesterday. Very tricky. But shorts, pound yen have covered, pound New Zealand, again, neutral, very weak against very weak, very sideways. I couldn't tell you which of these is going to become the strongest moving forward. Very hard thing to trade. I think with this, you can see with the price action on this, one of them could go crazy, obviously. So you would have got into this somewhere around there at this double bottom, and you'd have to withstand that before you got out on the recovery. But you can pretty much take anything on these pairs when they're range bound like this. When you've got a week against a week, any push will usually result in a pull, and especially with these two, because you've got one European and one Asian session. So the Asian session gets moved, and then the European session, Asian session, European session, Asian session, European session. There's always two spikes of movement in these, which is it's a lovely kind. And this, I used to trade this. This was my absolute go-to pair. This used to be 300 to 400 ADR. I traded this more than anything years ago, and then it just suddenly dropped away and died. But it's still a beautiful pair to trade because of the crossover between the Asian and the European session. So at the moment, range bound, no strength in either currency, taking longs or shorts. Pound US dollar short, obviously, don't want to get involved in anything but a long on that thing. The New Zealand, as I say, weak. We've had massive weakness in the New Zealand dollar. I get the feeling, and there you go, there's my theory playing out. The weakness is starting to falter ahead of the rate announcement in a couple of weeks' time. Whether or not it can actually make ground is another matter. And the danger you run is that accumulation up until rate announcement and then continuation. So with this one, Canadian dollars in charge, really, and Canadian dollars expected to strengthen. So I would really be looking for short opportunities on it. So if we can push into the rate announcement, you'll probably find you might get a decent move out of it. But again, very, very, very difficult. So I've just seen somebody post a nice unicorn. I assume that's a unicorn having its head blown by the ADRs yesterday. I've not seen that one before. I like that. I'm going to steal that unicorn. New Zealand CAD, yeah, shorts, still shorts. New Zealand Swiss, still shorts. I think the Swissy got done over yesterday, but it's not extended enough for me. And as I say, I'm taking this month off and just going to wait and see what the market does. I might start a small account next week. I don't know. I'll see. I might just ease in with some small positions just to keep my hand in, really. But at the moment, I just want to see what happens with this yen. This is going to be a real key player moving forward. If the yen is suddenly going to power up, it's going to change the dynamics of all the other currencies. So we will see things starting to shift. So I just want to see really today and early next week. I want to see what they do with those yens. New Zealand dollar, US dollar is a short, very weak against a continuously strong currency. Even though we've been bearish on it, it's still stronger than the New Zealand dollar, and it will remain so. You've always got to have a dominant currency in the FX markets, and it has always been the US dollar or the yen. And that's not going to change. The biggest economies will have the stronger currencies the vast majority of the time, unless there's something really bad going wrong. And at the moment, all the Fed keeps saying is, you're looking at the economy, which has been doing that. It's a slowdown, and a slowdown is basically a top. But the danger is we get that rollover, as you've seen in the S&P. This chart really describes what they are talking about. Yeah, this period here really is where the Fed are saying we are now. Yeah, and we've been chundering along very nicely through COVID. We've got out the other end of COVID, and now it's all starting to slow down and flatten out. This is recession. This is obviously, the big red flashing light saying, hang on, looks like we're going into recession. But this is the slowdown, and the slowdown is where we are in the US dollar at the moment. So when you're looking at the US dollar pairs, it could be a case of everything is starting to slow down in the US economy, therefore the US dollar will start to weaken, but everything else is slowing down and moving into recession potentially faster. But the problem with the US dollar is the bigger they are, the harder they fall. So the recession and the collapse tends to be quicker in the US dollar. So what we've got coming ahead of us over the next year or so is potentially a massive shift in direction. When you look at long-term charts, that is potentially what we're looking at. Something like that happening. This is obviously COVID stuff. Biggest economy in COVID, suffered the most, recovered the fastest. Recession will suffer the most. So we've got these big shifts which potentially are on the cards coming forwards. But again, you can't pick a bottom on them. And at the moment, it's business as usual. So you're looking to carry on the way we're going. The first signs of it will be when we break above the 72 and bounce off the 72 and make a new high. That is that might be where we're looking to turn. And what you will see is a bullish engulfing on the weekly, or some kind of massive bullish weekly candle, something like that, a bullish engulfing on the weekly. And then we will be like, a week of weakness in the US dollar is either a pullback candle in a continuation or the start of a reversal, obviously. So at the moment, I think we're a fair way off of that. After Christmas, I think that's when the belts are really going to start to get tightened. If inflation doesn't start to get under control, when we come out the other side of Christmas, when everybody has spent an absolute fortune, if retail doesn't recover, that's when I think we're going to start to see that shift starting to happen. And by then, the S&P and the other indices will have hit that magic pre-COVID level, potentially. Yeah. So we're looking 3 months into the future. So if you go back to sort of the July time, how much movement we can get in a 3-month period? Absolutely no problem getting there in 3 months. That's going to be the telltale. What happens when we get to that pre-COVID collapse, which the recovery was unbelievably quick considering what was happening with the economy in effect shut, retail shut, manufacturing shut, everything shut. And look how quick the market bounced. When we get down to this level, we are either going to collapse through or it's going to start to recover. And we're not going to know that until we get there and we see what the inflation figures are like. But this is January, February. So we got months and months and months. My point is we've got months yet of potential trend continuation up until Christmas. So it's business as usual on all of these, I think, until we get news otherwise. US dollar CAD, obviously, at the moment is a long. Can't find an opportunity to get in. That was the last entry, and it was beautiful. Prior to that, it was back here, but 4 hour, some kind of pullback and long is what I would look for on that, with a caveat of oil prices going through the roof for some unknown reason. If Putin blows up a nuclear power station or something, blows up the other 4 Chernobyl reactors, I don't know, and then obviously we're going to get a massive change in oil prices and Canadian dollar strength. So, but other than that, business as usual longs. US dollar Swiss, again, that one we need to see what happens with this Swiss franc. I suspect the Swiss franc will continue to be strong, but it won't be as strong as the US dollar. So again, the push and the pull with 2 strong currencies. One of them will get into more strength than the other until it runs out of steam, and then something fundamental will shift, like a rate change in the Swiss franc. We go the other way. We've just got to basically wait for some indication of what they're going to do with the Swiss moving forward over the next week. And the US dollar yen, obviously, we know potentially they could take control. The thing with the US dollar yen is these two are big currencies. When you get a safe haven currency like the yen, money tends to flood out of the US into the yen, and that's what we saw yesterday with the US yen. What did we get yesterday on the US yen ADR wise? 560 on a 200, so 250 ADR, roughly. Big old move, off the chart. It's that 2% of the time, 2% of the year, we get something like that. So yeah, big fundamental move. It's whether or not that yen is going to continue, and that strength is going to continue up until the 30th next week. Next week on Friday is when they're going to announce what they're going to be doing. So their plan, and that's when the market will know. I wouldn't be able to decipher whether it's going to be bullish or bearish, but the market will. So I'm going to wait and see what they make of it next week. Certainly looks like the market was bullish. Bullish yen, obviously. So, but like Andy said, with everything like this is an announcement of what's happening. That announcement has happened, but nothing has happened yet. And we've seen this from the yen many times, blowing off steam and saying we're going to do X, Y, and Z, and not following through on it. I would say it's the speed of that move yesterday, it's pretty sure that they are definitely going to intervene. But then you get comments coming out of Japan like this. If there's excessive volatility, we will take action. You caused excessive volatility. You did that. What action are you going to take? You caused the thing. You're going to take action against your own actions. You get these nonsensical things coming out, and you're like, well, just wait and see what the market does. See what the bank's positioning is on those currencies moving forward. And a move of that magnitude, if we pull back up to there, we know we've got to wait until next Friday for the real market reaction. If we break these lows, I would say the market's made its decision already. So I want to see what happens after this. So, this is like a control candle. Go to the daily chart. You've heard me talk about control candles before. This is your control candle. Yeah. Okay. Until we get a decisive move in or out of that, I don't know which way this thing's going. Nobody does. So we need to wait and see what direction the market decides to take on the yen pairs. Until then, there is opportunities in both directions. Yeah. So it's fair game. We're either going to gap fill or we're going to run for a low. Don't know which. And if you're trading intraday on this, you just need to make a decision. At the moment, obviously, there's your Asian range. Market's just not interested whatsoever today, is it? But break of those highs, probably going to run for the gap fill. Break of those lows, probably going to run for a retest. Simple trades. Stop other side. What will the market potentially do with those type of traders? Break out to the upside, get your stops in place, come down, take your stops, get the breakout traders to put their stops there, come back up, take those and revert to mean, because it hasn't got a clue which way it wants to go. So just be warned. If you see a breakout and then a pullback inside, that's a better trade. A false breakout trade in these sorts of market conditions, if you see it happen, that is probably your better. You drop down to M5, or even M1, in fact. Yeah, so you got your Asian high and low. So, you know, look for a reversal alert. If you get a break above an M pattern and a reversal alert, there's your short entry. Worst case scenario, assume they're going to come down and take the liquidity of everybody that's just gone long, and vice versa. Yeah, but equally the breakouts could happen. You know, and this is the age-old thing, and this is what I've talked about in here before as well many times. What are you? Are you a breakout trader, or are you a mean reversion trader? You got to make a decision. Yeah, one of the trades is going to work. You've got no idea which. You can do both. You can be the breakout trader, and you can be the mean reversion trader. But the mean reversion trader is going to get a much tighter stop than the breakout trader. And they're going to be knowing if their trade is working much faster than the breakout trader. Let's say we do that. You know, there's no right or wrong. You just got to get in with theory. So formulate your plan, execute your plan. Your plan will work or it won't. But as far as position trading goes, there's no way of trading this with a position really at the moment. Too dangerous. So just steer clear of the end still until we've got some indication of what the hell they're up to. So yeah, that's my take at the moment. Right or wrong, I'm just basically sitting here at a minute waiting for some indication from the market as to what the hell they're going to do moving forward. So we'll see over the next week. But only other news we've got is 9:30. So in 10 minutes time, we have the PMIs for the pound. Based on these guys this morning, I wouldn't expect an awful lot, unless it comes out ridiculously wrong figures. And the same with the US this afternoon. So be aware, we've got these. And you're only really going to get massive movement if we have massive deviation on price, on results. So I don't think really, unless we get some big numbers coming out, we're going to see an awful lot today. The market is in shock. So I wouldn't be surprised if we just saw some kind of accumulations today, and market rotations. And the same with the indices. We've had literally a sell-off at the open. We haven't gone anywhere. So difficult. I'm going to wait until next session. Wait till New York, and I'm going to see if I can scalp New York. I'm not going to play around with the DAX this morning. It was either going to be too volatile or too flat. I was expecting it to be volatile this morning, but we haven't had it. So I'm going to keep my powder dry until the afternoon. Someone just posted the US dollar index has jumped to its highest level since 2002. Whoops, on one. Let's step back to the DAX a minute. Yeah, so the Euro US dollar is the inverse of the dollar index. So if you haven't got the dollar index, just use Euro US dollar. It's exactly the same chart, just in inverse. So this flipped upside down. So that's the US dollar hitting its highest point since 2002. Can I get it? Yeah, it might be slightly out. So this is probably, I mean, it's way beyond where we were since 2016. So yeah, we're back to 2002 sort of levels at the moment. Nice little accumulation balance area there. But dollar rallying, yen rallying, there's only one winner. Can't dump all the money into both, so we'll see what happens. Be a very interesting week next week. That's coming down hard, isn't it? So I would expect the DAX to be rising off the back of this, but we've also got the DAX dropping as well, which is another anomaly in the market. Normally you will find the indices do inverse of main currency, and we're finding at the moment they're running in sync. So everything's out of whack after yesterday. It's all a bit of a screwy week. So glad to be flat, to be honest. Right, that's all I've got for you today. Anything else you need, come in the Telegram group. Just to say, if you want to play short terms on these today, my advice would be to concentrate on the Swissies and the Yens. And intraday, short-term timeframes, look for M5 reversal alerts. Beautiful one there this morning at the end of the Asian session. But look for the M5 reversal alerts or M1 reversal alerts around these support resistance levels. So if we get back down to these lows, yesterday's low, look for an M1 or an M5 reversal alert. And just try and catch some moves on double bottoms and liquidity runs today. I think that's the play. Intraday stuff. But don't just take reversal alerts for reversal alerts' sake. Wait, just monitor the pairs and look at where they are. And Asian there. So, M5, we've just taken the Asian lows. Bullish go. That's exactly what I was talking about. This price action that we've got here. Yeah. False breakout. Yeah, we've broken out the Asian low. Everybody has now gone short and put their stop above the Asian high. Okay. Market is now reversing. So on M1, your play was on that reversal alert. There's your entry. Broke out, push back up. Yeah, it doesn't matter which way you look at your W. Either that is your W or that is your W. Either way. Or the reversal alert retest was your W. Yeah, but somewhere around there was your entry. If that's a false breakout, look at your risk reward. 127 or 12 pips. 13 pips, probably go something like that, 15 pips, 44, beautiful. Trying to short long scalp on the DAX, on the double bottom. Short in holding time. Okay, trying to long scalp with quick on the double bottom, yeah. Yeah. I think you just got to be in and out fast today. It's just, the market's very, we've had a very large opening range with no follow through whatsoever. So, think about you just working in a bank, everybody has a list of tasks to do in any job that you do. In the banks, they have to execute overnight transactions. So they come in, Frankfurt open, they've executed overnight transactions. There's no speculative follow through happening. So all that candle is initial opening balance, as they call it, being transacted, which is all the hedges. There's orders in there to buy and sell stocks, portfolios, sectors. That's just execution of opening balance, as they call it. There's no speculative trading happened in the last hour. Not doing anything. So very, very little movement today, as you would expect when there's news coming out on the Eurozone for the DAX, but we didn't get any movement off of that because it was all very mixed. So, dodgy. But yeah, it's going to be a tricky day today. I think New York will be better. we'll have some decent movement, I reckon, in New York, because we had a very flat session. If you look at the indices yesterday in New York, it wasn't M1. It wasn't. There's nothing in New York yesterday on the indices. We just didn't get anywhere at all. Open, close. Complete flat line yesterday. Tiny. It's not. I think New York today will get more movement because they didn't execute anything yesterday, because obviously the fallout of the FX market. But you still had some decent movement up and down, but we just no direction yesterday. So today, I think there's your direction yesterday. So today I think we'll get some decent movement, and I get the feeling we're going to make inroads. This is the magnet at the moment. You can tell this is the magnet at the moment. We are really, really drawn to these lows across all the indices. So I've got to have a bearish bias on the day. We're so close to hitting that. Don't forget, this is also a these levels. When you look at these levels, they're not exact. This one happens to hit to the pip, virtually to the pip, twice. But the other two attempts we've had at this level have not been exact. So if this doesn't hit it to the pip, think of it a zone either side of it. There's a zone either side of it where you want to look. There's going to be pending entries. Some people are going to want to put their limits just below. Some people will want to put them above. So there's going to be a lot of transactions happening down here, which is where you get accumulation. Yeah, there's a lot of transactions happening down here. The limit orders triggering. Limit orders triggering. You're going to get a limit orders trigger off of that. We're going to get limit orders potentially trigger down there. So you might get a pop through as the market pushes down to trigger all those limits. If there's more of those than sellers, we're going to pop back up. But there is also, there you go, we just hit it to the pip. There is also the opportunity for this just to completely slam through. Watch that for a sec. So, within reason to the pip, one pipette away. So if you are going to get that bounce, there's a good gap fill opportunity there. But equally, it could just, flush and destroy you. Oh, adult sites back. By the way, that YouTube, this message is held for review. Who's going to review it? I'm not reviewing it, are they? So yeah, putting off the lows. So again, really tight reversal alert on that. As soon as you get that reversal alert, potentially stop under that low. We could be off for a runner if we're going to get a strong bounce off the double bottom. UK figures have just come out. Much faster to look at it here. 48. So manufacturing is up. Services are slightly down. Again, mixed results. One negative, one positive. Used to be the go-to place Forex Factory for cutting edge news. It's just so slow now. Just don't get it. It's easier to tell what the result of the news was by looking at the pound. So slightly bullish pound. Market liked it, but not a lot. Yeah, we're up over 1% on manufacturing, and we just missed by just over 0.5% on flash on services. So mixed, a little bit bullish pound. So if you're scalping, you might get a bit of a pullback from there on the pound. Nothing particularly exciting. More exciting watching the DAX. So we just stopped. So we've hit the wall. Watch this DAX moving forward. This is obviously a very, very key level. So see what we get. If you want to enter, one of the strategies as well, which is quite good to do at these sorts of levels, is to pick this is something I've been doing on one of my funded accounts, and it's working quite well. It's kind of a hybrid position trade sort of thing. So enter one position when you get a bull candle off of this level. Yeah. If it drops against you, do this. So enter one position that's somewhere around there. Have another position there, so adding to the losing position there, but with a stop. Yeah. So give yourself the option. So one of two things is going to play out here. We're either going to get a bounce, we're going to get a false breakout, or we're going to get a breakout. Okay. So if we get the bounce, I'm getting in, I'm adding to the position, and I'm taking advantage. Sorry, that's the wrong way. If we get the false breakout, I'm entering, adding to the position, taking advantage. If we get the breakout, I'm losing. Yeah, but if we get the false breakout, I'm adding to the position there. So one of two things, I'm not explaining this very well, am I? Let me do this again. So I'm going to enter three positions, basically. One, my initial position, second add, and I'm having a limit order as a backup. I'm stopping out on everything there. Yeah. So if we get the bounce, I get into two positions. If we get the false breakout, I get into three positions. If we get the breakout, I lose. Yeah. So it's basically a kind of hybrid position trade, scalp, but I'm giving myself three positions to get into the market. And most of the time when I've done these, I only get into the two because it doesn't trigger this one, or I get lost of two positions. So all you've got to do with this type of strategy is make sure that this stop here is something like I usually use something like 1.5%. So these are different size positions with 1.5% stop. But I always make sure that the winner is the big one. But it works really well at key levels, because what you get at key levels a lot of the time is you get a bounce at the key level, but the bounce is never spot on. It's quite often a false breakout. So that second position that you enter there, by the time you get back to the breakout level, you're in profit. And then you add, assuming that you're right with a false breakout, and it will push up. And quite often you will, on a false breakout, if it is going to become a breakout, you'll get a pullback and drop. You're out before the drop starts, because your risk reward here is at least 2 to 1, if not more, a lot of the time. It's a really good trade. You've just got to be massively patient and wait for these levels to come up, which are really good. This is an exceptional one, but they happen all day. Hourly levels are really, really good to use, and 4 hour. So look at your hour support resistance. Yeah, so these levels here, that one there, that was a beauty. I wouldn't know that was obviously in the Asian session. I wouldn't have taken that because I would have been asleep. But they get, actually no, that's not. That's London, isn't it? Sorry. So yeah, yesterday there was one there. I didn't take that yesterday. I didn't do it yesterday. But you look at these levels. Yeah, there's a false breakout. there, that candle. It's a false breakout of the previous day's low. It then came back down and broke out, but it doesn't matter. I'm in with 3 on that and out. It's a really good strategy, but you've got to be super patient. And you could sit here and not get any trades in a day. Super patient strategy, but you get one of those play out like Tuesday. Which day was it? There was one day this week I played it and I made $450 on pound on one trade on the funded account, and that's it. You're done for the day. If you get one that works out. The problem is if it doesn't work out the first trade, you're going to be 1.5%, 2% down, and it kind of puts you on the back foot for the day. So again, with everything with trading, there's pluses and minuses, isn't there? So getting a decent reaction there, bullish engulfing. So false breakout, first entry. Add on the reversal alert, or wait for the reversal alert as your first entry and add on a break of the high. Backup trade will be assuming that they're going to come down and put in a W, false breakout. I would have a second entry somewhere down there below these lows, and then I'd stop out somewhere down at the bottom. You've got to calculate all this. Anyway, it's just another strategy to have a look at. It works really well on indices. Indices respect levels a lot. Well, you can't really see it here, but I mean, they respect levels a lot. False breakouts happen all the time on indices. That's what they're doing. They're just sweeping liquidity and running with it. These sorts of levels are lovely. Took that one. But yeah, anyway, carry on. I'll be back on Monday and we'll have a look at the day's action today and we'll see what happens. But I think today, I really want to see some movement on these Swissy and yen pairs. I want to see what the market's made of this. And then Monday, I'll do a full analysis again and we'll see where we are and play it by ear from there. But RSI extensions, there's plenty of them, as you saw. Lots of opportunities to get into things today. But they're all going to be based around the yen. So, you make your decisions based on the yen, what you think is going to happen. Personally, I think it's going to strengthen. So if you found anything, you're not going to find any RSI extensions in your favor on those yens, are you? So you would have been in them and made a load of money on them yesterday, which I'm sure somebody did. So, all right. So have a good weekend, everybody. If you need anything, I'll be in the Telegram group. And I'll be back Monday, same time, 7:50, and we'll have another look then. All right, have a good one.